Good afternoon. We are doing it live and doing business here. More at 4 weekday afternoons. We get right down to business for the news-driven hour right after Ben Shapiro and just before the 790 KABC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KABC, streaming live online worldwide at KABC.com. And yes, the on-demand Mottek On Money podcast, KABC.com, Apple, iTunes, all your favorite podcast platforms. Stocks ending higher today, another record-shattering day for the stock market. The S&P 500 hit another record high close. The Dow coming in for a closing gain of 260 points, settling at 42,175. And the S&P 500 moved up 23 points, ending at 5,745, scoring its 42nd all-time closing high this year. The Nasdaq adding 108 points, ending at 18,190. The Nasdaq's been the laggard in all this, about 500 points or so from its all-time high. The price of gold, meanwhile, yep, you guessed it, at another record high today, up for the 7th consecutive trading session. That is the longest winning streak since April for gold. Looks like gold was up $10.20 today to settle at $2,694.90 an ounce. Did pop above $2,700 for the first time. Got up to $2,708.70, the highest intraday level for gold on record. Silver coming off an 11-year high now, down 11 cents at $32.30 an ounce. I'll discuss the very latest on the precious metals move on the upside with record set for gold and silver at an 11-year high. I'll discuss it, and I'll discuss it with Barry Stupler, the founder and president of Mint State Gold by Stupler & Company in Woodland Hills, former president of the American Numismatic Association. We did get some new readings on the economy today. The last of 3 updates on U.S. economic growth in the second quarter showed the economy expanded at an annual rate of 3%. Pending home sales ticked up in August as a big drop in mortgage rates prompted some home buyers to act. According to the National Association of Realtors, contract signings rose 0.6% in August from the previous month. According to their monthly index, pending home sales reflect the transactions where the contract has been signed for an existing home sale, but the sale has not yet closed. Meanwhile, mortgage rates did move lower for the third week in a row, but buyers are taking their time before they jump in. According to mortgage giant Freddie Mac's latest survey, the average 30-year fixed is now at 6.08%. That is the lowest we've seen since September of 2022. Job losses being racked up here in California, especially in the restaurant business. More than 5,400 California jobs have been lost since the $20 fast food wage hike, according to a new report. I'll discuss that. I'll discuss it with Will Swaim, the president of the California Policy Center. The price of oil still in the spotlight, posting the lowest settlement in about 2 weeks, despite the intense pressure happening in the Middle East. Tensions rising between Israel and Hezbollah and the ongoing war between Israel and Hamas that started nearly a year ago with the Hamas terror attack on Israel last October 7th. Oil prices also being impacted by Hurricane Helene's disruption to energy output, failing to provide support today for oil prices, with the storm expected to miss significant oil and gas production areas in the Gulf of Mexico. See the price of oil right now in New York, just above $67 a barrel. That is a 2-week low. And in London, Brent crude, the global benchmark, hovering just above $71 a barrel now. Joining us now, investment expert Brian Perry, chief investment strategist and portfolio manager at Mint Asset Management at mintassetmanagement.com, also author of the 25% Cash Machine. Brian Perry, wonderful to have you with us this afternoon.
Always good to be with you, Frank, and you definitely covered a lot of ground here, a lot of cross currents here, and certainly Wall Street had its own version of its fall festival here this last week here with a Fed rate cut. You had a China bazooka stimulus package crossing the tape. You had Meta unleashing its AI Ray-Bans, smart glasses. You had Micron earnings here, fortifying the AI trade. You had the Mag 7 story right back in action here with the whole AI gold rush back on, with a report out of Bain Technology that talks about how AI spending is going to jump from $185 billion this year to as much as $1 trillion in like the next 3 years. Whether they're talking their book or not is hard to tell, but it really got that whole momentum back in the AI trade here. You've had new highs like you mentioned in precious metals. And you had Intel, getting, maybe a quasi bid from Qualcomm here. Some interest to have, because Qualcomm's they're a fab company. They really don't make their chips. They outsource all that. So it'd be nice to have their own onshore manufacturing facilities, but Apollo came in maybe with a $5 billion bid possibly to help Intel out. You had end of the quarter window dressing, which is going on right now, which is the reshuffling of portfolios by fund managers into the winning stocks to kind of just doll up their portfolio so they look good to their clients here when the quarterly reports come out. And you just had a broad rally back into crypto. Risk is back on in the cryptos with really, with only Bitcoin up 3% or 4%. Some of the altcoins were up 20, 30%. They're really, Shiba Inu and these other ones, which are really, the real outliers. So they had a big week. And at the core of this, this rally here, you've had, a general FOMO, fear of missing out feeling here, where you have normally September is a tough month. And we started out very tough in September here on the downside, with an ugly August. And now things have started to turn higher here with the Fed, pulling forward as we're front loading their rates, as opposed to, waiting to see, quote, being data dependent. I think that their internal reports show that the job market's a lot weaker than they first had thought because of these massive revisions. And we had good economic numbers here today and during the course of the week, but it's really all about the revisions, Frank, and not what the government puts out up front on the headlines, which is what the market reacts on, but it's more about what the revisions are, which, it tends to get, buried into the back seat. So I'm looking for the market here to close out on a strong note, probably by the end of the month here, because tomorrow's PCE, which is a personal consumption expenditures index, which is the Fed's favorite inflation number, is going to show probably an increase of only 0.1%. That's going to continue to keep the momentum going here. Fund flows into the market have been rather strong, and you just have people feeling like, we probably have an election where we're going to have a Republican Senate, a Democratic House, and a jump ball for the president. But, gridlock in Washington, as usual, is good for the market.
On there live with investment expert Brian Perry with Mint Asset Management at mintassetmanagement.com. And Brian, let's talk about Bitcoin here and the cryptos. Certainly an impressive bounce back from the recent lows. Bitcoin up nearly 400 now, above 65,000. And Ethereum at around 2,600. And Doge at 12 cents here at the moment. We talked to the biggest fans of crypto here, as well as the harshest critics. It's certainly a lot more fun when it's going up. But Bitcoin certainly has come off its recent low. And where do you see it go from here?
Well, I've been calling for 80,000 here for the balance of the year, and I think it's headed there right now. I think that there's a renewed sense of need to have a hedge against these fiat currencies. We're in a massive global rate reduction cycle right now. All the central banks are lowering their short-term funds, and Europe's PMI, their purchase management, that went negative. So Europe is technically in a recession. So and you look at China today, lowering their interest rates, across the board. Second largest economy in the world, in China. They slashed their short-term interest rates and reduced their reserve requirements for banks, which is expected to release about $146 billion in liquidity. They're going to lower their interest rates on $5.3 trillion in mortgages. They're going to provide roughly $113 billion in stock market liquidity just to help, the stock market over there. Then you've got, over here, we don't have either candidate, Kamala or Donald Trump, is talking about working with the deficit. Okay, they're just talking about spending money, and so you have this not only this rally in metals, but you've got also a rally in a hedge against the deterioration of fiat currencies around the world here, and that's where you get the crypto rally with Bitcoin, Ethereum, and other names in there, which are just an offset. And I think people are starting to feel like, well, this is a larger macro trade on play right now, and I think it does help Bitcoin make its way to 80,000.
Make some excellent points there with the dollar continuing to weaken. And as we've seen in the past, the Dow rallies when the dollar is weak because the weaker dollar makes our stuff less expensive overseas. So the multinational companies benefit from all of that. So thanks for laying that out for us. What about getting back to the Mag 7, which we haven't talked too much about? And by the way, the NASDAQ has not joined the record-shattering winning streak this month here. Still about 600 points or so from its all-time high. NVIDIA, though, has seen an impressive bounce back above 124 here. What about Mag 7 and NVIDIA? Well,
again, NVIDIA is the champ in this whole space right now, and they're going to released their next generation chip here in the fourth quarter, which is actually going to reaccelerate their growth rate going forward here with Blackwell. You've had other names break out here, and other than it might be a Mag 8 for all I know. You've got Oracle here, which is really on the verge of growing the database business here by leaps and bounds. They're talking like building out 2,000 different massive data centers around the world, and names like Tesla here. They're going to have their robo-taxi event here. I think it's October 13th. You've got Microsoft now cutting a deal with Constellation Energy for 20 years to reopen the 3 Mile Island plant there to supply them with nuclear energy, so they can supply power to their Hungary data centers here. So you've got this trade is back on in a larger way, and people are starting to say, where they were calling into question, whether the spending spree on AI would somehow hit the wall by next year or 2026. It seems like now the thinking has shifted back again, Frank, to like, wow, this is really a secular trend here, where we've got a 5, 6, 7 year build out of infrastructure, where software and hardware are going to be in enormous demand here, and margins are going to be very fat, for these companies that are making this stuff going forward, which puts NVIDIA still in the driver's seat here with other names behind it. Arista Networks, ANET, is another one that does a lot of networking for the big data centers there, so that's a really good name. Dell Computer, liquid cooling servers, for these data centers here. So there are other plays outside of NVIDIA which are very important to the build out of the infrastructure here, and even some of the REITs there, Equinix, is a big data center operator there. So there's plenty to do in AI, and it just has taken on a new life with some of these reports out there. Like the spending really is going to remain very robust.
All right, and today Micron Technology took the spotlight, one of the biggest gainers of the day, about 15%, more than $14 at 109 and change on its latest earnings news. That's another AI darling, right?
It sure is, yeah, and they do what are high-performance memories chips, which is embedded in all these different, what they call stack systems here. So you have to have memory that goes along with performance side GPU chips. And so the Micron just, their sales are up 92% year over year. They gave a very strong backlog read in terms of and pricing margin. So Micron is a stock there that has been hit. It typically trades at a much lower multiple because they're more of a commodity chip company. But now that they're back now that they've started to really ramp their AI business, the stock cleared its 200-day moving average here. It bolted higher by almost 15% here to 109.88 on the close, and it's down from 157. So it's way off its high. It's got a nice double bottom formation here for those that follow technicals. And I would just say, look at the stock. There's a big air pocket underneath, so give it a chance to breathe here. And normally in the first week after you get a quarter like this, and at the end of the quarter, the market tends to settle back here. So you get a chance here to spotlight those companies like Micron and NVIDIA, which has had nice moves here this week, to pick your spots here and find your price points, because those stocks are ones to buy on big pullbacks.
All right, let me ask you the big question here, and our audience appreciates always the thoughtfulness that goes into when I ask you this question here. Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Where are you putting money now and or taking it off the table?
Well, I'm buying. I'm back in the truck up here into Berkshire Hathaway, BRKB, the B shares here. I think that the stock is. It ran up to 480. It's back to 455. They have all the right things going on, and they have a war chest of cash. And their biggest position is still Apple and a number of the insurance companies here, which are doing extremely well. Those like big bond portfolios in a market rally here. So BRKB looks good. Dominion Power, it sounds like a boring name, but the 5% dividend here, and with the utilities now in growth mode because of the demand for power, Dominion operates the largest number of data centers in the world in Loudoun County, Virginia. So bear that in mind. Cirrus Logic, CRUS, Cruise, they are a big supplier to Apple for the new Apple i16 phone. Stock ran up to 160. It's pulled back here really nicely here to about 122. Take a look at that. In the nuclear space, we talked about that. Nuclear stocks are back up. Uranium prices are turning higher here. URA is the ETF for the uranium space here. URA looks good here at 29. Robinhood Markets here. They're bringing in a lot of money here with their offer for their IRA gold funded IRA. They're matching funds coming in for gold, and it looks really good here. And American Semiconductor for superconductor, AMSC for people who don't know, relatively new name. They provide solutions to the grid, okay, for utilities out there that need to really advance their systems rapidly. So AMSC looks great. The stock has had a nice move up to 25. It's pulled back here to 22. Take a look at that. Coming off, Nike. Nike is facing a lot of competition here. With the Hoka on sneakers and other competition here. This China trade is nice, but I think it's going to fade, and I think it's a good time to if you get a pot, fade the rally in Nike. And certainly, I took some money off the table here with Flutter, which is the FanDuel. We had a great profit in that here. And I took some money off the table here with Pulte Homes. The home builders have been made a good run. And I took a trade on Reddit here, which made a nice. It got to my price target here of 69, so I jumped out of that. And I sold the BDCs, Frank, the business development companies here, which are most of their loans are floating rate. You're moving into a lower rate market here, and so their interest rates are going to be less. Their dividends are going to come under question here, and they're probably under pressure. And I've been rotating all that money for high yield investors into corporate bonds here. One name I'll throw out there is the BlackRock High Yield Corporate Bond Fund, HYT, paying 9.4. Pays a monthly dividend, and people looking for income, this is the place to be. This is the sweet spot right now because the economy is still going to move forward at 2-3% rate, but you want to be in corporate debt, which has got a little bit of leverage to it here because the borrowing costs are down and the payouts are fixed, and you're getting a really nice, near 10% rate of return.
Terrific, Brian. Well, thank you very much for that thorough assessment and analysis. As always, we do appreciate it. That is investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Also authored the book, The 25% Cash Machine. Brian, it's great to speak with you. Thank you very much for taking the call this afternoon.
Okay, always good to be with Frank. Thanks so much.
Thanks very much, and let's get right out to the freeways now on 790 KABC. Mottek On Money continues in 790 KABC. Good afternoon. Another record-shattering day for the stock market with the S&P 500 at a record high today, up 23 points at 5,745. The Dow up 260 at 42,175, and the Nasdaq up 108 points at 18,190. The price of gold stands at a record high today. Gold continues to shine, a week-long record-shattering winning streak, just below $2,700 an ounce right now. Did pop above $2,700 an ounce for the first time. We'll talk about it. We'll talk about it with Barry Stepler later this hour. And silver, we see coming off an 11-year high right now, down 4 cents at $32.30 an ounce. Bitcoin rallying up nearly 400 now at 65,130. Ethereum up 5 at 2,638. And Doge at the moment at 12 cents. Among the winners today, Micron Technologies moving up 15%, up more than $14 at 109 and change. The Magnificent One, NVIDIA, up 53 cents today at the close, back to 124.04. Oracle up $1.82 at 168.10. Tesla shares pulling back nearly $3 at 254 and change. Among the losers today, Super Micro Computer down more than $55 at 402 and change. And Diamondback Energy, the ticker symbol on that one is FANG, down nearly $12 at 168 and change as oil names came under pressure. The price of oil has been pulling back lately. Right now, oil down 18 cents in London to 71.42 a barrel. That's the Brent crude global benchmark. And we see crude oil in New York down 11 cents at 67.56 a barrel, a 2-week low for the price of oil, despite the intense pressure happening in the Middle East at the moment. And now the latest news for you right here on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. Bit of a ray of sunshine in the economy today, the national economy. The last of 3 updates on the economic growth number in the second quarter showed the economy expanded at a rate of 3%. Meanwhile, we're watching the job numbers very closely. It looks like Paramount Global, some tough announcements there this week. They continued their layoffs. They're ahead of their planned merger with Skydance Media. Paramount had said last month already that they would be cutting 15% of its workforce, layoffs that were estimated to affect about 2,000 employees. Paramount Global, of course, the parent company of CBS, as well as Paramount Global. Job losses being racked up here in California and other sectors, especially in the restaurant business. It turns out about 5,400 California jobs have been lost since the $20 fast food wage requirement kicked in, according to a new report. Let's bring in William Swaim now, president of the California Policy Center, who's been following this story closely. Thank you very much for coming to the line this afternoon.
Wow, thanks for having me.
Wonderful to have you with us here and take a closer look at this report. It says more than 5,400 California jobs have been lost since that fast food wage requirement went into effect. You've had a chance to take a closer look at that. Tell us what we need to know about that eye-popping number here.
Yeah, thanks, Frank. This was utterly predictable from the first moment this bill was introduced 2 years ago. You cannot simply arbitrarily raise wages in an entire business sector without expecting a number of knock-on results, including lots of layoffs, lots of automation, store closures, and perhaps worse for a lot of people who rely on fast food, menu price hikes. So yes, 5,400 jobs lost year over year. You can count on the governor to instantly try to come out and refute that number and argue that, in fact, when you raise wages, employment will skyrocket because everybody, I don't know, just gets free money or something. But it just really reveals, this law does, a catastrophic misunderstanding of simple economic principles. If you raise labor rates, prices will also rise. That's what we call inflation, and it has a disastrous impact on a lot of people.
And businesses, of course, trying to wrestle with all of this, and consumers, meanwhile, facing that iPad more often. Self-service is happening a lot more these days, and you see these robotic couriers on the streets of West Hollywood especially, which, by the way, has the highest minimum wage overall in the United States. So businesses doing whatever they can to survive at this point.
Well, that's right. You know, I used to be a lefty, Frank, and back in the day when I was a good old progressive, I worried about something called food deserts. That was the disappearance of grocery stores and restaurants in poor communities. That's what we're starting to see. We're seeing automation, menu price hikes, layoffs, and store closures. And the stores are closing in the places where consumers can't just simply pay more because they don't have that kind of capacity. So this thing that was this law that Newsom said was going to help the poor, it was pushed by unions. We could certainly talk about what their goal was in doing this, despite, right in the face of economic logic. But this bill, this law that took effect on April 1st was supposed to help the poor. It is hurting the people it was supposed to help.
What about the outlook here at this point? Looks like one report we've seen here is the report that this is the worst fast food job growth rate since the Great Recession days, and that was a very painful time as well. So what is the outlook here given the current environment?
The outlook is worse, Frank. I'm sorry to say. There's a recent survey that just came out from the industry itself, and it shows that nearly 100% of all fast food restaurant owners in California are doing a number of things. They are doing the layoffs, they're doing the menu price hikes, and they're going to do more of that. But they're also doing something else that wasn't anticipated in the bill. They're saying they're not opening new stores. These are people who may own, a dozen stores, 20 stores, 60 locations, 100 locations, and they're saying they are no longer looking in California. That's a loss to our economy. That is a loss to people who need a job, who are looking for a job. So that's what's in store for us next. The other thing is that the union behind this, the Service Employees International Union, which hoped that this would kind of spur unionization in an industry that they have failed to be able to unionize, they have already gone back to the state to say we now need a $2 per hour increase over the $5 an hour increase you just gave us. So they're doubling down on stupid, if I can say that. I hope I don't offend anybody, but this is going to get worse.
On there live with Will Swaim, who's the president of the California Policy Center. Should tell the folks about your background. A journalist for nearly 3 decades, started by covering international business back in 1990, founding editor and publisher of Village Voice Media's OC Weekly, and editor of Watchdog.org, a national network of investigative reporters. He also hosts National Review's Radio Free California podcast. It's great to connect with you here live on the air on Mottek On Money on 790 KABC. Will Swaim, zoom out to the big picture here on the California economy, with the job picture now very much in focus, and that was clear when the Fed had their last meeting and decided to pull the benchmark Fed funds rate down by 0.5 percentage point, bringing the prime lending rate back down to 8%. And we've seen a tremendous stock market rally to record highs since that announcement. What do you see happening here in California?
Well, in California, we've got, of course, a lot of very localized, that is unique to this state, headwinds. Among those are regulations like the one we've been discussing here, the fast food wage hike. But we've also got 200 state agencies that regulate virtually every area of business and private life. And these regulatory agencies make it very difficult for businesses to start up. We've, of course, seen an exodus of hundreds of large and small companies out of California since Gavin Newsom took office. It has really accelerated. Our unemployment rate, Gavin Newsom loves to go around and campaign for Joe Biden and for Kamala Harris now, pardon me, mental lapse there. But he goes around and he talks about how great the Biden-Harris administration has done on unemployment, but California has the worst unemployment rate in the country. And the reason for that is that businesses cannot really start here. It is a very difficult place to build a business, very difficult place to employ people. So while the broader nation is likely to recover, we're likely to see here in California what we saw in the early 90s. Frank, I don't know how old you are, but I was a young reporter at the time. And I can tell you, early 90s, California was sort of weirdly isolated we had a kind of recession here that the rest of the country seemed to escape. And that was kind of the beginning of the sign that the glow was off the Golden State and that we had some regulatory problems we had to deal with. Instead of dealing with those, we made them worse. I don't mean to be a Debbie Downer here. I'm so sorry, but the fact is that California is an island in the land, if you will. It is a very unique place, and our regulatory environment is hostile to business startups.
Excellent points. And yes, I was here back in those days when we saw those big changes in aerospace in particular, that which impacted the Southern California economy in a big way. We're still the number one manufacturing region in the United States by far, by the way, although a lot of that has been chiseled away. But aerospace has always been a very big part here. But, of course, Elon Musk just recently announced that SpaceX is moving out of Hawthorne at some point. He's already cleared X, formerly known as Twitter, out of the Bay Area. Chevron recently announced they'll be moving their headquarters from San Ramon to Houston, which has become the oil hub of America. Of course, many years ago, California accounted for 25% of the entire world's oil production. So certainly a lot of changes in the oil business too. So we've lived through quite a bit.
Yeah, we really have, and we've got a governor and a state legislature that is determined to shut down fossil fuels. It's so interesting. Right before you and I started talking, I was listening to your update on the news, and you've got this gigantic lithium battery fire. This is supposed to be a clean economy. We were promised that when gasoline prices rose high, that the trade-off was going to be that we're going to have this clean economy, but there's nothing clean about the clean economy. Everything, Frank, you know this, everything's a trade-off. As we shut down oil, as we raise the costs of refining oil, our governor doesn't look at the fact that we have the highest gasoline prices in the country. He blames oil companies for gouging California, but only California. Every one of the other 49 states and the District of Columbia pay less than we do. The only state that sometimes passes us is Hawaii, which has to import every eyedropper full of gasoline. We pay the highest gasoline prices because we have the highest regulations around that gasoline, and yet our governor is determined to try to blame oil companies for secretly conspiring to destroy California's gasoline retail market.
Last time I looked, Los Angeles drivers were paying even higher than they have in Hawaii, by the way, which, of course, is in the middle of the Pacific Ocean. So that is quite stunning, by the way. So, but that's the way it's been for quite some time. In the Los Angeles area, folks probably paying among the highest, if not the highest. We're looking at $4.56 now, the average price for regular gas in the LA area, $4.94 a gallon for premium, and diesel, of course, which is the global fuel, has also seen a big run-up, and we follow all of this very, very closely here, Will. Well, thank you very much for joining us here. We appreciate it, and great to connect with you here. Will Swain, president of the California Policy Center. Great to meet you here on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. All that glitters is gold. Gold up again today to another record high, up for the seventh consecutive trading session. That's the longest winning streak we've seen, well, since earlier this year. Gold has been on a tear this year, so is silver. Looks like gold rose more than $10 today to settle at $2,694.90 an ounce after popping above $2,700 an ounce for the very first time. Silver has hit an 11-year high this week, right now at around $32.30 an ounce. Let's bring in the expert Barry Stupler now, the founder and president of Mint State Gold by Stupler & Company, based in Woodland Hills, former president of the American Numismatic Association. Barry Stupler, thank you very much for coming to the line. Timed it perfectly. Another record high for gold today. Give us your reaction to this big news this week.
I think I'd like to talk to you every day. The way things are going, a daily call could be very bullish for the gold market. We have a lot of very happy clients in the gold market that have been highly rewarded this year. Gold is just setting new records, as you said, virtually every day. It started the month at about 2,500. Now the actual spot price of gold reached 26.85 this morning and settled around 26.70. That's the spot price. That's what we basically trade at. Silver is trading over $32, up from $28. That's not bad. It's about a 14% return in 1 month. I'm sure that our clients are very happy with that. The factors that are moving this market are a lot of very bullish factors that are moving the market. The war in the Middle East and in Russia and around those areas is driving a lot of new money into it. When you have a critical situation like that, a lot of people want to be in gold. It's really the safe haven. Plus, at the same time, we're seeing the Chinese. They had stepped away from the market a little bit back in July, and all of a sudden now they're stimulating their economy, and they're throwing trillions of yuan onto the market to help their beleaguered property market and to help the stock market. And that is showing a lot more confidence in the gold buying. So you have to realize China was, up until just recently, the number one gold buyer in the world, both domestic by the central bank as well as the public. Now, over the last couple of months, India has stepped up, and they've been aggressive. Now, with these new stimulus programs coming out of China, we're going to see China going back and running up the market. So right now, we're almost at 2,700. I was originally predicting 2,800 by year end, but I'm thinking I have to modify that because I was looking for 2,600 by the end of this month, and it's already substantially over that. And the buying doesn't seem to stop. There's a lot of articles being written about how many people are coming in to the gold markets, particularly in Europe and in Middle East and in Asia, as well as the United States. So the demand factor is just driving this market.
All right, and so tell us, what is your prediction of where gold goes from here?
I think we're looking for 3,000 by the end of the year. It just, the factors, there needs to be some negative factors, and there aren't any. I mean, if the Fed doesn't raise interest rates again in November, that could be a negative factor. But I don't think gold's going to sell off very much. I think 2,600 is probably going to be a good support level. And if it breaks 2,700 in the next week or two, 2,800 should be a shoo-in by November. And by December, we get the normal run. Typically, a lot of buying comes in late November, early December in gold, and that could take it up to $3,000. So we're looking at so many factors right now that are so bullish for gold and silver. It's just incredible. I've never seen it this bullish, setting new record highs virtually every day. Typically, you see a run up and then a little sell back, a little profit taking, and then all of a sudden it will trade in the trading range for a short period of time and then start to hit the highs again. We're not seeing that. We're seeing one run up after another, setting new record highs. So, but it just tells you the volume is picking up, the demand is picking up, and I'm seeing a substantially new amount of gold buyers coming into the market. Where 3 months ago I was talking to people that were thinking about selling. Now I'm talking to new people who've never bought gold before, want a little guidance, and they want to get into the gold market too because they're looking for stability in their investments. strategy.
That's amazing, and it should be noted, gold is up 30% since the start of the year and up 45% over the past year. Silver also along for the ride, up 34% since the start of the year and up 44% over the past year. What about silver here? Any predictions on silver now above $32 an ounce?
I would have shared those numbers with you, but I didn't want to brag. So
thanks for not stealing my thunder.
So we're silver. There's a lot of people that are looking at gold and silver, and they see gold at new record highs, and silver, even at $32 an ounce, is about 70% of what its record high is. So silver could easily break above 40 and head on to 50 sometime in the next year, but the buying factor needs to be there, and it's coming back. We're seeing China upping its silver buying because of the only part of their economy that's flourishing is their solar panels. Solar panels demand a lot of silver, and they're seeing to record demand for that, and that's causing them to buy a lot of silver, which is obviously also contributing to the move in silver.
You're live with Barry Stepler, and that is quite an assessment, Barry. And I know you've been doing this for a long time, and I remember we were speaking during the Great Recession days, and the question was, if gold went to $3,000, would you sell at that point?
No, I've had a lot of clients who have had for, 40, 50 years who have called up and said to me, is it time to sell? And my answer is pretty much constant. If you need the money for a better purpose, if you have some use for it, a trip, travel, your family needs, whatever it may be, sell a little bit of gold, take the money out, use it for what you need. But if you don't, it's only going higher.
Barry, thank you very much for joining us live here, and look forward to many more conversations as we track this record run-up for the precious metals. That is Barry Stepler, founder and president of Mint State Gold by Stepler & Company in Woodland Hills, former president of the American Numismatic Association. Stay tuned now for the 790 KBC News Blitz with Randy Wang. And tomorrow we're doing a special event. It's the Over the Edge event. The Union Rescue Mission's Just Help One campaign. I'll be rappelling off the top of the 25-story Universal Hilton Hotel. John Phillips, Randy Wang, and I'll be there tomorrow afternoon, so stay tuned. This is Mottek On Money on 790 KBC.
Hey, it's Rich Eisen here. Join me and my compadre, Chris Brockman, every Monday on the Overreaction Monday podcast.
A 2023 last place team will win a playoff game this year.
I'm taking the Cincinnati Bengals to be that team. If you gave me two,
safe bet.
If you said two last place teams, I might say that's an overreaction. Come react or overreact with us. This one makes it much easier. Right. So thank you for making it easier.
Well, tune in next week.
Overreaction Monday, wherever you listen.